Let's pretend this is your salary. So we have $100,000 as our starting point. We're going to see what tax deductions that we have first. For example, let's say that you contribute to a 401k, which is a tax deduction. Let's say you have health insurance, which is a tax deduction. Let's say those amount to $10,000. So we're going to have a $10,000 tax deduction in this example. So let's say you have further itemized deductions. So let's just say you have more deductions, more tax deductions, which could be property taxes paid, charitable contributions, mortgage interest. These are all tax deductions, and let's say those amount to $30,000 more. So we have $30,000 more in tax deductions. So we have $40,000 total in tax deductions, and we have $60,000 from the original $100,000 going to taxable income. So a lot of people, they don't understand how the tax brackets work, so they mistakenly think that the full $60,000 would be taxed at the 22% tax bracket because they look up the chart, they see that they fall there, so they think that the entire $60,000 is taxed at 22%, but that's not how it works. So we have taxable income, $60,000. The way it works, a bracketed system is, these are approximate numbers because the numbers will change for inflation each year. So this is just for demonstration purposes. How it works is the first $10,000 that you earn going into taxable income will be taxed at 10%. And then the next $30,000 that you earn will be subject to a higher tax bracket. That $30,000 that you do make will be taxed at 12%. And then the remainder of your income that you have, your taxable income, that will be taxed at the higher tax bracket of 22%. If you can see from the table, it shows that the next $40,000 that you do make would be taxed at 22%. However, we only had a remaining $20,000 of taxable income going into that tax bracket. Therefore, only that $20,000 would be subject to the 22%. So as you can see, the first $10,000 you make does not get subject to 22%. The next $30,000 you make does not get subject to 22%. It goes through a bracketed system. The more money you make, the higher your marginal tax rate will be. So moving on, we have this amount of money in taxable income subject to their own tax brackets. So Kyle is going to help us in the first bucket of the $10,000. That $10,000 will be subject to a tax rate of 10%. So $1,000 of tax will come from that bucket. So that will go to our section where we have labeled it tax. In the next bucket, where we have the next $30,000 we made subject to 12%, that bucket, in that bucket, it will be taxed at a rate of 12%. Since we have $30,000 in this bucket, we're going to take out $3,600 of tax from that bucket and add it to the tax pile. And then the next bucket, remember, we only have $20,000 in this bucket, but that's going to be subject to a tax rate of 22%, which is going to amount to $4,400. So Kyle's going to take the $4,400 and add that to our tax pile. But we are not done yet because you have tax credits that you can benefit from that will help you. For example, you have tax credits for educational tax credits, you have electric vehicle tax credits, you have child tax credits, you have child care tax credits. So in this example, we're going to say, let's say you have a child, and for each child you get a $2,000 tax credit. So that's going to cut down your taxes by $2,000. So in this example, we have $2,000 of tax credits, and then you have the remaining tax money after the tax credits going to your total tax. And that is how the entire tax system works. So just to recap, you started off with $100,000 as your starting points, and then you went through your tax deductions, and then whatever was remaining was then going to taxable income. From that taxable income, that was going through the bracketed system of your taxes, each with a higher marginal tax rate. and then that gave you your tax. And then you take away for your benefit the tax credits, and then you finally end up with your total tax.